Hi, and welcome to the X22 Report Spotlight. Today's guest is David Morgan. He's from the Morgan Report. That's morganreport.com. I am very happy to have him back here on the X22 Report Spotlight. He's going to tell us all about what's going on around the economy with gold and silver. David, welcome back to the X22 Report Spotlight.
Well, Dave, it's a pleasure to be back with you. Thank you.
Hey, thanks for coming back. And there's a lot of things happening out there today, and we're seeing ups and downs in the precious metals market. And I mean, if we go back to December, we know that gold was around about 1,050. We saw it move up, getting close to 1,300. I think at one point it hit 1,300. And then all of a sudden, we saw gold and silver being suppressed. I think at one time there was like 18,000 contracts thrown at it, brought it down. And now we're back around, what, 12, 17. What's your take on gold and silver, and where do you think it's going to go from this point on?
Oh, great question. First of all, people that are members of our website, themorganreport.com, got a heads up from me that silver had peaked at 18 and gold at about the 1,300 level. And at that time, I gave them cues to look for to come back. And I also cautioned everyone, of course, they're paying me for our best thinking. And it's not just me. I have two analysts. I have a supreme webmaster, secretary, the whole nine yards. But the point is that I said, don't give up all your profits, because a lot of these stocks had gone up like 200%. So I put out an article on the web that said, the equivalent of what we've made on some of these companies, and some of these are big companies, is equivalent to silver going back to like $40 an ounce. Who would be upset with silver at 40 an ounce right now? Hardly anybody, because, there were a lot of people that bought in above 30, and I know that. In fact, I bought a little bit at the $30 level myself. But nonetheless, where's it going from here? Lower? And I really have to look at the critical breakout areas that I give to my readers. Excuse me. And that's an art, not a science, Dave, as you know. And a lot of people don't believe in technical work, but it works. Not all the time. It's a tool of many. But if you're in this business, you need as many advantages as you can have. And the main advantage, Dave, and I'll say it plain, loud, and proud, is you've got to be able to think like a criminal. Because if you don't think like a criminal, you're not going to beat these guys. And I've had that method. In fact, I gave that idea to Eric King many, many, many years ago. But so I'm looking at a critical point. Basically, it's a breakout point. So it's 16 and around the $1,200 level. And that's critical to look at two things: the COT, what the commitment traders looks like, and what the volume is, and which direction it goes. So for an example, if we get a large sell-off on huge volume, then obviously we're going to go into lower territory, and then I'd have to reevaluate, and I would give an update for my readers. So that's an example. But what do I think? I think the bottom's in and we've peaked, and I think we're going to kiss or touch or test those breakout points and come back up. That's what I think right now, until proven otherwise. And I'm modest. I might not sound it. I know I speak with authority, but I've earned it. But the market is the master. Manipulated or not manipulated, the market's the master, so you have to pay attention to the market.
Do you think the yuan-based gold price that came live in April, do you think that had any effect on the gold and silver price?
It did. It had a psychological effect, especially in the Western mindset for a while. And I won't disparage Kuz Jensen in any way. He's been on our Mastermind series. I love the guy. I think he does excellent work. But my take is that it's going to work its way into a more powerful scenario over time. My take blends in with some of Jim Rickards' thinking, which means that we're going to see more of the currency slant gold price, yuan, in other words, the paper trading of gold more than the physical trading of gold, because at the end of September, end of October, I forget which, the yuan will be admitted into the basket of currencies for an SDR, i.e. the IMF, which is sort of the control frequency over this whole parlay of globalism. So what I really said was, look, I think the paper paradigm, even on the Chinese side, is more important to the Chinese than a lot of us, physical only types. Not that I don't do the paper thing with mining stocks and ETFs, and I do, but that's after my physical is tucked away and locked up. Nonetheless, the point is, I think it's more of a wishful thinking at this point in time than a reality. Will it manifest into where they control the physical realm? I think it probably will, but I think it's off in time.
Now, something very interesting, and we talked about this pre-interview about the usdebtclock.org. At the bottom right, we see prices of gold and silver back in 1913, and then we also see it for today, present. And right now, gold is at 7,331, and silver is at 812. What do you make of this?
I don't know what to make. I'm laughing because, laughing out of, not embarrassment, out of like, what the heck is going on? I look at this thing from time to time, but you're the one that brought it to my attention. I go, wow, we've got to get this on your show. First of all, I think what I make of it is, I think it's relegated to M2, which we discussed, which means, even the U.S. government is admitting in current, fiat terms, an ounce of gold would be about $7,331 per ounce. Silver, the way they get that's interesting because I don't know how they derived the number. I assume they did it the same way or the same methodology to do with gold, but at 800. So you got a ratio of about, 9-to-1? Mm-hmm. If it was 1/10, it'd be 700. So it's greater than that. So it might be 1/9, I guess. But anyway, it really shows you between the two metals which one's the most undervalued, which is silver, which I'll stake my reputation on again one more time. But fascinating. I don't know if it's what it could be. I mean, we could go on all day about speculating. I'll just throw out one and leave it at that and throw it back to you. But it could be some kind of psychological factor or some kind of, look, we told you so you, the U.S. population, the world population, governments, or whatever, on our debt clock, what the value of an ounce of gold is based on the current fiat money Ponzi scheme that keeps increasing in the amount printed. And so don't be surprised if we revalue to those levels. I don't know. That's my speculation on it.
I mean, do you think that's where gold and silver actually are right now?
Oh, yeah, I would say, yeah. I mean, the math, it's arithmetic. It's not a very hard problem to do. I mean, Jim Rickards does it in his new book, which, by the way, is a good book to read. It's more of a primer type of book, which is fine for the general public. I think he's a great writer. He's got a great editor. I think it's less of an academic read than his other two books, which I've also read. But, if you just do how much gold the U.S. government purportedly has versus the M1 money supply, you come out with something like $6,000 an ounce. And so that's an easy. And so then how do you get the silver price? And I wrote that. I'm one of the first to do this, although not the first. But if you go and you Google engineering the price of gold, you can write my missive back in the early 2000s, and it gives you the arithmetic. So once you determine the price of gold theoretically on a paper price, then what do you say? You say, well, what's silver? 1/16 the ounce of gold? That's the monetary ratio. Or do you do it as 1/9 the price of gold, which is the natural ratio? Or do you just make up a number? So I'll leave that to your listeners to determine.
Do you think the central banks and the governments are more worried about gold or silver?
That's a fascinating question. And first of all, this is opinion. So if you have a different opinion, you don't have to write me and tell me I'm wrong. You just have your opinion. It's as valid as mine. So let's get that off the table. I think gold is more important for the establishment because gold is establishment, believe it or not. Central banks have been net buyers of gold for several years now. If you go back to probably 15 years ago, and you go to the BIS, the Bank of International Settlements, they used to account for every nation state under their domain in gold-only terms. They've quit doing that for years and years and years now. But if you think about it, if the banker's bank only accounts in gold and doesn't care about your foreign account reserves or how much fiat you hold of another nation or any of this other nonsense, and they only account in gold, what do you think that says? I think it says, he who owns the gold makes the rules, and who's got the most gold's making the rules. That's what I think. But that's, again, my opinion. So I think you could make a strong argument, gold's more important on the establishment Anglo-American empire or the new financial system. I think it will play a role during the reset. However, if you go and you put on, you live in my house for a while, I would say question this. There used to be the strategic silver stockpile of the U.S. government. Look up the word strategic if you're not sure what it is. And I'll give you this piece of undercover information. I am very connected through the silver world. Certainly don't know everybody, but I know quite a few.
Hmm.
And one of the gentlemen I know actually is involved in a silver recycling business. And he's met in Washington, D.C. More than once regarding silver stockpile and all that. Because remember, there was a silver stockpile back in the 80s that didn't know what to do with. And it's a strategic stockpile. Oh, what do we do with the silver? Well, everybody believed in just-in-time inventory and get as much as you want with, press of a mouse. So we got all the silver. Why don't we sell it? So that's when they came up with the idea of the Liberty, which is actually the official name everyone refers to as the Silver Eagle, myself included. But actually, if you look at the law, it's the Liberty. So they said, well, what we'll do is we'll give all the silver to the mint. We'll let them mint it up into, silver coins with the government stamp on them. We'll sell them. So that's what they did. So they depleted the strategic stockpile. And what's interesting, Dave, I'm going to digress, go down a rabbit hole here, is when they made that bill, they basically made it that it had to be U.S.-based silver only. So in other words, you could only use silver for the Silver Eagle program that was mined in the U.S. Well, guess what? They ran out of that ability some years back, so they had to alter that bill and say, now we can take silver from anywhere. So part of the imported silver, not only just the Silver Eagle, think about this, just the Silver Eagle program depletes all of the U.S. domestic in the ground of the continental U.S., there's none mined in Hawaii, that pops up and is minted, and then they have to import more just to keep up with the demand for that one coin. Anyway, he said, so going back, I digress to come back and say this. So this friend of mine that was in the meeting about the strategic stockpile said to me, quote unquote, David, the government cares a lot more about silver than they do gold. Now, you can take that for what it's worth or not. But, you can't run a war without silver. You can't have communications without silver. You can't have this biocide that will kill antibiotics or kill pathogens that antibiotics won't reach anymore. There's a lot to the silver story that we could, again, go for 2 days on. But the idea for me is I'll take him at his word. And I'm biased towards silver. But it was an interesting comment because it kind of shocked me. He says, David, the U.S. government cares a lot more about silver than they do gold. I didn't expect to hear that, but that's what he told me.
From your contacts and from the people that you know, is the government stockpiling silver in another location if they care so
That
much?
would be pure speculation on my part. My belief, and this is, way out there on the speculative side, so take this with a grain of salt. The one statistic that nobody could get, I mean, you go to Handy and Harman, you go back, in my 4 decades, is how much is used in the war effort or in the military. And that's like off the books, black budget, never talked about. It's black budget, I'll retract that. But no one gets a handle. And we know, like the, mill grade, mill spec stuff, like their batteries are silver. Not all of them, but a lot of them. So there's a lot, used in torpedoes. There's a lot used in electronics. And no one has a handle on how much is used on an annual basis in the defense budget. Nobody. Somebody, well, let me rephrase that. Somebody does, but it's not publicly available. And it's not available on the, look, I'll sneak the number to you. Don't tell me, tell anyone where you got it. I've never had that ability. So no one, to the best of my ability, knows. But it's got to be a fairly significant number. And, another one of those enigmas of the silver market.
When we look at gold and silver, should people look at the price, and when it reaches a certain price, should they start to worry that, maybe I should, get some gold and silver? Or are there other indicators they should look at? Because there's some people sitting on the sidelines waiting. They're seeing gold and silver move up and down, and they're saying, I don't have to, I'm going to wait till it drops a little bit more until I pick some up. Is there anything that you see or you can tell people to look at where they might start getting worried about, okay, maybe I need to start piling up some silver, some gold, just to protect my wealth?
Well, there's a couple things. One is, any default, of course, and there's so many ways to define that because, these days, if you breach a contract, it just seems you get your hand slapped and pay some kind of fiat fee and life goes on. Unfortunately, that's our world. The, this ABN AMRO bank, Dutch bank, in fact, they just came from Sweden, they had gold accounts that were physical and they settled in cash for their clients. So these type of things are indicators, but basically I think I'll rephrase the question. I think the idea for your listeners is basically you want to buy low and sell high. You want to have an ounce that buys, 10 loaves of bread, and then that same ounce will buy 100 loaves of bread in the future. Now you know what the value is basis another commodity, as an example. You don't really want to measure it in terms of fiat, although we all do, but the real measure is what's the value versus other goods and services out there. That's where you want to get the correct valuation on the metals. So I'm going to put up on my Twitter account a hashtag silver affiliate. So I'll hashtag silver affiliate, and I'll give you an affiliate program where you can actually get paid in gold and silver just for sharing this. It's not multi-level marketing. I'm not really very pro multi-level marketing, but it's friends of mine that started a savings program that you just dollar cost average. So, the average guy can, $50 a month, $100 a month. You get a windfall, you work a bunch of overtime, you got, $300-400 to put in. It's basically designed for the silver stacker. I mean, certainly large accounts have bought into this, but it's really more designed for people that want to accumulate. So I'll put up that in Twitter when we get off the show. And as far as what to look at, excuse me, I thought about this in the pre-interview. There's a lot of things that, none of us can forecast. And there could be a minor little thing that shows up, like some, relatively mid-class retail dealer that fails to deliver. But we've already seen that with, Tulving. We've seen that with, Northwest Territorial Mint. We've seen it with, Bullion Direct, I think. There's been a lot of defaults, and there'll be more. So, that's a cue. But I want to look at it technically, and this will not give the idea of what you asked me. So I want to be clear. It's not like, oh my God, once we get to those levels of gold and silver, David Morgan said, I better buy it or I won't get it. That's not what I'm saying. What I'm saying is the psychology will change so much that there could be, and I think would be, such a rapid increase in physical accumulation at these levels that you better start thinking seriously if you've got all you need or all you want. And that is $26 in silver, US base, and $15.50 gold. When you break up through those levels and they hold and move up from there, those are the levels where the whole psychology starts to change again. And when that happens, that's when you might ask the question you asked me. It's like, hey, is it getting tight? Is it or not? And even if it's not tight, and I'm not saying it will, I don't know the future, but if it's whatever it is, those are the levels that you want to say, hey, I've got enough, or I better buy it now and put it away, or that type of thing.
Will there be a point where people just won't be able to get gold and silver?
It's happened very, very rarely in history. It's almost stupid to say that it could happen, but I'll say it could happen. In fact, I think it will happen. And the reason is that there's very few times in monetary history where you have this kind of conundrum where the fiat system ends for all practical purposes. And it's always ended basically in, these little countries that you have my book on silver, you've read it. We show all those tables of all the countries that have failed in their currencies. And, there's tons of them. I mean, it's like you get the book and you read, the Silver Manifesto, and you look at those pages, you go, look at all these countries whose currency failed. And the reason they didn't go completely, why, let me rephrase that. I'm getting excited. The reason they kept going was that they had a default currency to go to is the U.S. dollar. So everybody with Zimbabwe's went to, precious metals and the U.S. dollar, and all these other countries that are in the book, they de facto went to the U.S. dollar. So they went to physical fiat. They went to physical hard currency, meaning a piece of paper. And that's what's, there's such demand for the dollar. I mean, so that's what kept these things alive. But when the dollar goes, there's nothing else to go to other than maybe all electronic currency or the precious metals. The precious metals, in my view, will be absolutely part of the go-to place to be. The real question, I know you're going to ask me later in the interview, is, what does that look like? Is it gold only? Is it, that type of thing? So, yes, I think there'll be such a demand on a global basis because this will be the first time in history where it's the globe involved. So there'll be such demand for physical that there'll be places where you can't get it, or at least can't get it in size. So, for example, a hedge fund with 500 million or 50 million, or maybe even 5 million, won't be able to buy that much silver or gold at a time. Whereas if you go to your local coin dealer and you go in and say you want to buy some silver, he'll probably say, "Oh, sure, I've got some silver. What do you want?" And he says, "Well, I want, a couple 100-ounce bars." "Well, I don't have those yet. Somebody might come in. I'll put you on the waiting list. But right now, I've got this silver dollar in this package here in this pretty plastic holder, and it's $1,500. They'll always be like the rare coin market, and there will be some silver probably at low levels, meaning bag here and there, bar here and there, some rounds here and there, and it'll be on eBay at exorbitant markups and that kind of thing. But real size, yeah, I think it's going to be a time where you won't be able to get it in size.
Let's move on to the economy. We're seeing the U.S. government continually tell us that everything is perfectly fine. The market is being pushed up. Gold and silver is being suppressed right now. The Fed is talking about raising the rates in June. Two-part question here. How, in your opinion, what do you think the economy is doing right now? And do you think the Fed is going to raise the rates in June?
Well, I'm going to do the question backwards.
Okay.
Do I think that they'll raise the rates in June? And the answer is first of all, I doubt they'll raise it in June, but I am kind of the lone wolf in my peer group. In other words, all the guys at Wright, the Bill Holters and the Andy Hoffmans and whatever, and they all, we all respect for each other, at least I do. But I'm of the opinion that this idea of raising rates, there's more behind it than what many others talk about or think about. My thought is that the reason that they will keep the rates positive is that all these others that I think are 28% of the bonds in the global markets are negative interest rates right now, is that there's an arbitrage that's obvious. And the obvious arbitrage is, do you want to lose money by putting it in the bank, or do you want to make money by putting it in the bank? So it makes the dollar stronger for people that own debt. And that's something that I don't know too many are talking about. So Dave, from my position, I think that they'll probably, even though almost everybody disagrees with me, and I could be wrong. I mean, I've been wrong before, but I'm not afraid to think on my own. So that's my thoughts, that one, it probably won't happen in June, but I think it will happen. And there'll be some, lame brain, numbskull type of, excuse or propaganda press that'll say, well, the economy's doing so good, we just have to raise it because, we see inflationary pressures up ahead, or some nonsense like that. When the reality is the real economy is not recovering hardly at all. There are little sectors here and there, certainly, that are, doing well, but overall, the physical economy, no, it's not. But they can make an excuse on why they have to raise interest rates, not for the reason I outlined, because they have to keep the dollar strong and they have to keep people from bailing out. I mean, the bailout of the dollar right now has been rather significant. And if it continues, the only way to get people to keep a sucker in the game, so to speak, is to keep it attractive. And the way you keep it attractive is keep it at a higher interest rate.
So you talked about the dollar, and it looks like the governments, the central bankers, they want to get rid of physical cash. We see out in Europe, they're getting rid of the 500 euro. We see that NASDAQ, Citigroup, Visa, Fidelity, Capital One, First Data all met with a company called Chain to talk about electronic currency. In your opinion, in your analysis, why do you think there's such a push right now to get rid of cash?
Well, I wrote an article because one of my members, and as a member of the Morgan Report, you're allowed to write us 2 questions a month, and we guarantee an answer. It was a question that he wrote, many, a few others wrote, and so I addressed are we going to go cashless? And it's a lot harder to implement than to state it. I mean, as I said in the previous question, there's a lot of physical dollar bills out there in the globe that people use in transactions. I mean, you could get the physical dollar bill accepted globally just about anywhere. Now, not necessarily in a hotel or in the white market, but in the black market, you pretty much can. But the reason they want is pure and simple control. They want to know everything you do, everything that you spend, everything that every transaction. And it's easy in today's electronic world to do that. So if you eliminate cash, then everything has to be done electronically. And it also provides a more important aspect, and that is you can't escape. If you're only in the electronic world, then where do you hide? Well, you can hide in gold and silver, obviously, but as your paychecks come in or whatever, you just basically can't hide anything. So everything is transparent to them, no privacy, and much more control on their part. In fact, there's all kinds of things that are facing us just dead ahead. I mean, one is the bail-in. I mean, the Dodd-Frank bill says they're not going to be bail-out. So what does that mean? If there's not going to be a bail-out, that means there's going to be a bail-in, which means it could be like the Argentina situation, because they won't take your money, Dave. You've got, I'll just make up, no, I won't say you, I'll just say Mr. Smith. So Mr. Smith has $55,000 in his account. And so the bail-ins come and they say, oh, we didn't even take any of your money, Mr. Smith. But we did do, and I'm putting this in, we're going to do what Argentina did, is you can only take out $300 a week. Yeah, but my mortgage is $1,500 a month, and I've got electric bill and a phone bill. Well, we're sorry, but we're doing this bail-in to save the banks, and you get $300 a week. So that's what happened in Argentina. I'm just arbitrarily making up numbers. It's the idea that's important, but this is devastating the population. The other scenario is the Greek, the Cyprus event, and you could be Cyprus, where you do end up with 30% less in your account, that type of thing. So these are real concerns and real people, and really the only escape route is, physical cash or physical metals, or, reinvest in your business, or, prepay something, or, there are alternatives. You have to think a little bit, but it's all about control. I mean, there's two types of people in the world. There's those that want to be left alone, like yours truly, and there's those people that just won't leave you alone. These do-gooders that know what's better for your life than you do. I mean, how anti-freedom can you get, Dave?
I agree. Since the economy right now, a lot of the economic sectors look a lot worse than 2008, and we know the president, we know the Fed, they're continually telling us that everything is fine. Everything's okay. The economy's doing well. I mean, when I look around, when other people look around, there are major, major problems. And a lot of it's a lot worse than 2008. At this point, right here in the month of May, we're seeing gold and silver trying to make a move up. We see the economy continually declining, especially in manufacturing, GDP, retail's contracting. Housing prices are coming down. We're starting to see things start to contract. What would you tell people to do at this point? Tell them to invest, pray. What's your main advice to people right now? What should they prepare for, or what should they do?
Wow, it's a bit of a burden, and it's, lays heavy on my shoulders, but I've got pretty good shoulders even at my age, and I'll take it on. One, I think you have to really be educated. I mean, listen to shows like yours, the SGT Report, and some of the others, and get a solid base. In other words, get a strong foundation. And what is the truth? What really is going on? When you look out your window and you drive down your main street, when you travel, what do you really see? And don't sugarcoat it, look at reality. If you can determine for yourself that things are not getting better, that we are going through a transition, and that things may be very unpredictable in the future, but you need to protect yourself, then you have to go with conviction. Once you've made that decision, don't make it wishy-washy. Don't, listen to Fox or, Beck or some of these characters and decide, well, if he knows more than me. No one really knows more than you from a real standpoint, but I don't have time to go into philosophy. So have conviction, and from that point, look at what's the most needed by you. That's the reason I started the silverprepper.com website, was to give people the ability to buy this, prepackaged food. Now, let me tell you, it's expensive. I buy it because my time is more valuable, because I still make a good living, doing what I do. So it's easier for me to take that money and spend a couple $100 on a bucket and put it away than for me to go down to Costco, get in line, but it's cheaper to go to Costco, get in line and shop. So let me just tell people that I want to be a good truth-telling guy. So, but get some food. Get your priorities. So your priorities, if you've got very little excess income, or you have to have a garage sale and sell one of your cars to get prepared, then that's what you've got to do. And in that case, I would, as a scenario, get food. Get food, get real, and get food, get real things. After that, if you need to protect yourself financially, and you have modest amount, I'd go to silver. I don't like to recommend silver only, but gold, even at 12, $1,300 an ounce, is maybe out of the budget of some people. And so I would rather, from a personal perspective, say, look, I think you'd be better off with a couple buckets of stored food, some canned goods, stuff you eat all the time. You could buy these type of medical things and store them. They store forever, and they'd be good barter items. I mean, I don't want to get too doom and gloomy here, but you're asking, and I'll fill it in. I won't go too much longer. But it all comes down to getting real with yourself, buying real for yourself, and understanding yourself, and balance. Balance, balance, balance. As much as I've been in this world, I've looked at this for a long time, and a lot of people love to let me know that I'm wrong, that, we haven't had a collapse. And I retort with, no, I'm right. We had the collapse in 2008, and when it's only being strung along for another 8 years, and it may go another 2, but it's not going forever. And I believe in my lifetime, the 2008 crisis, and the mainstream calls it a financial crisis, will be worse, unfortunately. So you need to be prepared mentally. You need to be prepared somewhat physically, and you need to be prepared emotionally, because a lot of people that have a lot of wealth in fiat terms right now, when that turns upside down, their pension's no longer there, and they got laid off, and they didn't get their bonus and all these other things that are going to take place. They might have enough assets in a financial sense, or even in a physical sense. They might have so much food just in their pantry that they're in good shape. Won't be able to take it emotionally because they're so tied to something that is a ethereal, made-up proposition. A man really doesn't create anything outside of the monetary system. Everything else either comes from the ground, it either grows up out of the ground or is dug out of the ground, and it's remanufactured, or a lot of creativity is involved to make a piece of metal into a bicycle or an automobile or whatever. But I digress. I come back to say this: you got to be real with yourself. A real person can be the same if they lose everything, because they have themselves and they have their abilities. And that's kind of what I'm pushing you toward. Am I that person? Probably not, but I like to think of that's the goal to strive for, that I'm just the same here and everywhere, wherever I travel, et cetera. I'm consistent. But we all have needs, and they all vary somewhat, but we're humans. We need to eat. So think about that. I probably overdid it, but I really want to take that message on, because it's something that's absolutely vitally, critically important. And Dave, you've put a great deal of time and effort of your life into giving people this message. And you know what really irks me is that there's so many people that listen to this show or your show, or other shows that I'm on, and other people, and they look at it as infotainment. They look at it, oh, aren't those guys cute? Aren't they funny? Oh, wow, if that ever happened, we'd really be in trouble. And they don't take it seriously. And it's the boy who cried wolf. I know it is, but you're better off. And the food thing is a no-brainer. I mean, if I'm wrong, and I could be very doubtful, but I just don't know the time frame. You can always eat food. I mean, you have a no-lose bet.
That is true. Dave, once again, how can people see your work?
The easiest way is to just go to themorganreport.com and get on our free list. I've put out a new 12-page article or a PDF file called Riches and Resources. It talks about a lot of good information. There's a movie that's there that you can watch for free that gives you kind of the global empire scenario and the age of empire and all the different phases of the age of empire and where we are, and basically backs up everything that you've been doing for the last several years, Dave, and backs up everything I've been doing for the last several years. So that's a start. The other place you can go is our YouTube channel, which is kind of wimpy. I mean, compared to yours, I think we have 14,000 subscribers. It's called Silver Guru. The Twitter feed seems to get a lot more activity. I think I've got 25,000 or something, but it's just a number. I know that. But there's more people that come on Twitter, and it's at Silver Guru 22. So there's Twitter, And there's a Facebook page that's corporate. I don't even know what it is. It's there somewhere. If you type in the Morgan Report, you probably find it. My staff does the Twitter. I do myself, and some of my staff are allowed my account because this is like critical information. Like some of your reports, we'll tweet them up there because it's like, this one's so good, you've got to listen to it. Or I'll say must listen, and I'll put the URL in there. The YouTube channel is just kind of a rehash of what's already on the web. And the Facebook is sort of just the same. It doesn't do the tweets. But anyway, back to the point. The main place is just go to themorganreport.com. And if you type in David Morgan Silver into Google, you'll have enough stuff to read for probably the next 3 or 4 days.
Dave, once again, thank you very much for being on the X22 Report Spotlight.
Always a pleasure, and thank you so much for bringing up the debt clock. That's a fascinating question.
Yes, thank you.